Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Cochran, Chief Currency Analyst here at HYCM. As folks are coming in, saying hello, hi Sammy, hi Van, good to see you guys. Just going to go through the disclaimer as folks are coming onto the webinar. Just to make it clear that the whole idea of this workshop is not that I provide signals or show people what trades to take. The whole idea of these workshops is by looking over my shoulder, you can see the thinking process that I use to choose the pairs which I'll be trading on a day-to-day basis, and then that can inform you how to make your own trading decisions for yourself, what kind of issues to look at. So we're going to be having a little tour of the major currencies as well during this workshop, and seeing what some of the major triggers that I'm looking for on different currencies. We're looking for trigger points to move currencies out of their current expectations. So we'll be looking at that as well through the session. The session ahead, we'll be looking, the special topic for today's trading workshop is the problem of headline news trading for the retail trader and what to do about it. Now, this is something that's very difficult, and we've seen this particularly pronounced on the pound at the moment, which is why I thought I wanted to bring it up. Over the last 2 or 3 weeks, there's been a lot of headlines that have been coming out and moving the pound, and some of those headlines move the pound for maybe 3 or 4 minutes, and then the price is retraced. So what can we do about that as a retail trader? How do you handle that inflow of news that you're not privy to? Well, we're going to have a little look at that, and I'm going to sort of give a couple of solutions, and that's going to be particularly relevant for the vote that's coming out tonight. We've got a Brexit vote this evening. We've also got another potential vote tomorrow and another potential vote on Thursday. You can imagine there's going to be a lot of Brexit headlines coming out. So how do you deal with that if you don't have access to the information? I'm going to give us a couple of solutions for that. Handout for today's session, that is found in the handout section. If you've just joined us, you haven't missed much. We're just letting folks know where the handouts are. If you go to the GoToWebinar control panel, click on the little grey triangle under handouts, and you should see workshop guide October the 22nd. If you double click on that, you will see a handout which comes up like this. Now this handout has 1, 2, 3, 4, 5 subtitles, and those 5 subtitles are designed to focus our minds on what we should be doing as we come to the desk each day. This is something that I do intuitively, and when you're just starting out or starting to learn to trade, print this out and put it by the side of your desk, as that will help you with that will help you with your trading. I'm just going to reply to this person who's contacting me and just let them know that I'm on a webinar, so can't. There, that's good. I'll just let them know that I'm on a webinar. I can't speak. It's always awkward when someone asks you a question mid-flow. So this handout, print it out, put it by the desk, and it will give you 5 key topics. And these 5 key topics will enable you to have a foundation for your trading. We're looking back, we're looking forward, looking at the charts, looking at your risk, and looking at the outcome of your trade. So this is designed to be 5 key foundations that just form the part of everyday, day-to-day trading, which I do. So by following that, you will have a good base to use. So keep that open for now. Any suggestions for topics? There's no sound. Okay. Right. Okay. Let's just see the sound. Okay. Can you guys hear me? Okay. Sammy, can you hear me okay there? I've just got someone saying they can't hear the sound. Okay, let's just check this. Okay, all okay, UA. Yeah, that's okay. Yeah, okay. Oh, that's good. Yeah, that's great. Thanks, guys. That's super. Oh, yeah, I think that's um, just someone else who's been struggling there with me. Yeah, okay, super. Sorry about that, guys. Okay, so that's the handout. Now, let's get stuck in. Oh, any suggestions for topics, just email me here. Okay, now the Brexit latest. We're going to get into this straight away. Now, we are reaching a really pivotal point for Brexit. And the main issue that we have today for Brexit is what is going to happen with the withdrawal agreement bill, which is being voted on today. Now, the withdrawal agreement bill will be voted on this evening, and what will move the pound higher is if you get this scenario. If you get the withdrawal agreement bill passed by UK Parliament, but without any customs or referendum amendments being added to it, that is the key issue. So it's expected that the withdrawal agreement will be passed today. That's expected. But what currently isn't expected is that there won't be any customs or referendum amendments being added to it. So the best way to understand this is that there's some people who don't want Boris Johnson's parliamentary deal. So what they're going to try to do, they're going to try to add an amendment or an addition to the bill that brings in something like some reference to a customs union or a second referendum, just something that kind of makes Boris Johnson's deal less attractive and kind of frustrates it, but in a different way than voting against it. So that is what is going to be a key focus for the pound today. And we're seeing some downside in pound at the moment. So if we just have a little look at the pound chart, I'll just drag it across. If we look at the pound chart today, right, what we're seeing some downside in the pound. And this sudden downside move came on some news that Boris Johnson has said that if the whole programme is not agreed, and if there's an amendment that's attached to the withdrawal agreement bill, which frustrates his purpose, he said he's just going to pull the whole bill and they're going to look at a general election. So what Boris Johnson has said is that if they, if that doesn't go through this evening, then an election is the next pathway for the UK. So the pound has sold off on that news because if it does come down to an election, the Conservative Party is currently in the lead. And if the Conservative Party is in the lead, it's expected that they will get a majority and they're more likely to pursue a hard Brexit. But I have to say, it gets a bit murky from this point on because I can't see Boris Johnson pursuing a no-deal Brexit with the EU just after he's arranged a Brexit deal with the EU. That in theory, there's no reason why he couldn't do that again or re-vote on that bill if he does it again after a general election. So I'm a bit uncertain on the pathway of the pound if the withdrawal bill is kind of voted down tonight. I think there might be some modest downside, but obviously there'll be a Brexit extension, and then it will be onto the headlines to see what Boris Johnson thinks about doing next. But the only way we're going to get the pound moving higher really at the moment is if we get the withdrawal agreement passed. Now that's happening at 7 o'clock British summertime tonight. So any time from around 7 o'clock, remember UK Parliament politics tends to drag on. It's not always straight on the clock. It could easily be 7:30, 8 o'clock. But that is when the first vote is expected. So if that vote is expected, and if there's no amendments added to it, then the pound would rally. And I'd expect the pound to rally, up to 133, 135. So if we just go out onto the larger time frames, I'm expecting, if the agreement gets passed, then I'm expecting to move up here to these near highs as a first stop, and then from there back up to 13500. So 1.3 and above would be a reasonable target that I'd be looking at should the withdrawal agreement get accepted without any amendments. So that's what you want to look at. And then there's this whole program that comes to it. So you see, this is the problem, because even if the withdrawal agreement gets passed tonight, you've got debates tomorrow for 12 hours and debates on Thursday for 8 hours. So there is quite a high chance that at some point during these 3 days, there's going to be a big sticking point. But that's the main thing to be looking at here at the moment with the pound. Obviously, there's a lot of headlines coming out, so we'll deal with that as well. How to do the problem of news trading during the webinar. In fact, it makes sense to do that now, because if we look at the pound chart, we can see that during the course of the day, there's these constant little mini spikes. Few spikes here, this recent spike here, that little spike here. There's many times there's little headlines that come out and move the pound. So the latest movement on the pound down was simply on the news that Boris Johnson will go for a general election if his withdrawal bill is defeated tonight. So these little movements are literally prompted by the news. Okay, they're squawks. The squawk service comes out and the squawk service updates these news. So let me show you. I've got a website for you. I'm going to send a website to all of you. Okay, and I'm going to show you the source of a lot of these news. That comes across the feed. So here you go. So that is, I've sent a link to you, and the link I've sent to you is this website here called RandSquawk. Okay. Now RandSquawk is the world's #1 squawk service. It's literally used by desks all over the world. Okay, so it's very popular, and what I've noticed is often the squawk service, they're often talking out what's on like the Reuters terminal. So Reuters, again, is a very good news service. It's one I use for my work with forexlive.com. And often I've noticed that RandSquawk are just talking out what's coming up on the Reuters news feed. So that is here. And what you can do, you can go, if you go to the packages, if you go to Forex, okay, one way to deal with this news trading is actually to get this news service for yourself. So I just want to talk you through how it works. You have a real-time, a light, and a basic service, okay? And the basic and the light service have a 1-minute delay on the audio stream, okay? So that's 1 minute late, okay? Obviously, to get it real time, which is the most useful, you have to pay more money to get it per month. But the basic service is a relatively modest fee of £20 per month and will give you a sense of how it works. There are free trials that they do. So one thing I would say is, if you are, looking at, you want to know, well, how good is a news service, then what you can do is you can trial out one of these services for free. You get like a 1 or 2 week free trial, and that will give you an indication of what it's like. It would also, just having even the basic one would give you some of the news flows that is growing across the wires. Now, when you're sort of tuned into these news flows, it's much easier to understand the sentiment of the market, because you're seeing the information that all the other traders are seeing across the world. So it's very hard, if you don't have the same information, to make the same decisions. So this is a really useful service. And if you've never used a squawk service before, then you definitely want to try it. So just take out one of the free trials and have a look. I've got no connection with Round Squawk at all, so I'm not promoting their services. I'm simply saying that when you have a new Squawk, that's what's been moving the pound a lot in the last few weeks, and actually having access to that Squawk service can give you that edge. You can suddenly be right in at the beginning of some of these big moves. You can be in after the first minute or so. You can be in that move. Now, obviously, it's another skill recognizing which are the important news announcements, and that's another skill. But just understanding how a Squawk service works would be helpful. So if you don't intend to use it, I would recommend getting the free trial just so you can see it. What is it like? What's it for? And then you can make your own mind up. And even when you get the 1 minute delay audio streams, sometimes that's still enough to action on a news trade, and you also get to see the text headlines that are coming out. So the text headlines I would say, you might think, oh, okay, if I've got the text headlines real time and the audio stream 1 minute delay, then all I need is this and just read the text. Two things to say. First of all, when the Squawk comes out, it's about 60 seconds, a minute, until it becomes a text. So on the real-time service, what you get is the audio comes out, and then the text comes out about a minute later. So in this one, the audio will come out, and then a minute after the audio come out, you get the text would come out, because often you get the text as well as the audio. So that's just something to be aware of. Now, the other thing that you can do, and this is helpful, it's say for example, you come to a move, okay, and let's just take an example here, okay. Now you come to a move and you see, look, the pound has shot up, from here, from the morning to midday, it shot to 1.300. That is like nearly 240 pips, okay. So you can see, okay, the pound has moved up 240 pips. Why is that? So even without a new service, what you can do is you're going to miss that move, okay? You're going to miss that move because you're not going to know why it's happening, and the top of the move is probably here, okay? And that's probably usually the move on a headline Squawk is over about 3 or 4 minutes. So these moves will be very quick. You see 1 minute, 2 minute, 3 minute, about 4 minute candle, and then a lot of the profit is taken. So by the time as a retail trader you find out about it, okay, you're either going to buy up here at 1.300, or you're going to be buying as everyone else is selling or closing their positions. So instead, what you can do, you can see the move, and then when you've seen the move, analyze it. So, well, is that a significant move? Is that a significant change? I can't remember what that move was. I'm trying to go back into my memory banks for the 17th of October, but I remember it was renewed optimism about a deal being passed. I remember it was significant, and let's say for the sake of example that this was a significant news move, then the very simple approach to take is to just draw a Fibonacci retracement on the move, and then just take a position at the 50% retracement level and play up to the highs. So you could have played a move up from here, back up to the recent highs, 1.2940, something like that. Just going back from the 50% retracement back up. Now, this is when there's really strong reasons for the pound to move. Now, okay, obvious place to put your stop would be here under 1.2740, but instead you might want to think, well, that's the obvious place. Let me just put it here slightly out of the way, 1.2659. Let me just move it out of the way so it's well out of the way. I'm not going to get a spike down and a move up. It's very frustrating when you get a liquidity play, which is some of the big players, they're looking for a way to fill their orders, and retail stocks are a great place to fill their orders. And then you can see price just carried on grinding higher. So that's about two things that you can do about headline news trading. And just to be aware, it's very, very frustrating. I'll give you another website which will help. This website here, they will have the news on anything that's moved a currency quickly, within about 2 or 3 minutes. They will have the news up there, so you can always check the website I've just given you, forexlive.com. I cover some of their sessions for them, and I know that the back end is very good. We're using a Reuters feed, a Bloomberg feed. I've got a Squawk service on as well, so you put that all together, you've got really good resources. So any big moves are called out, and that's the other good thing about the Squawk service. Is say there's a have you ever come to your terminal and thought, oh, there's been a 200 pip move on a currency pair and I missed it? Well, if you use a Squawk service, you've literally got an extra pair of eyes or ears, because they'll suddenly say, oh, we're seeing some downside in cable, or dollar yen seeing a quick bid, and then we'll say why it is, or we're looking for a reason why. So that's some of the advantages of using a Squawk service, but it's not the end of the world if you don't have one. You just have to be more picky about the moves that you take. And obviously, you don't want to get involved in news trading, in that very fast headline news trading, because you can't compete. You can't come in 2, 3, 4 minutes late. You're just going to get frustrated, and you're just going to lose money. So don't do that. Okay. So we've looked at Brexit. We can see that tonight is the key time, 7 o'clock. We'll have the vote. Now, it's also worth sort of taking a moment to pause. Where are we now with the US-China trade talks? Well, President Trump said that a trade deal with China is coming along great, and any issues in phase 2 are a lot easier than phase 1. So the market has been optimistic on the US-China trade talks. Also note that with the Brexit vote coming along and the optimism running into today and previous week, what we've seen is the equity markets rallying on Brexit optimism. So just to be aware that if Brexit suddenly turns negative, that might affect risk tone. So if you think about it, we've had positivity for US-China, positivity for Brexit. And so equities around the world have liked that. So just be aware, if the Brexit deal doesn't get passed, we may see some of that optimism recede. So where we are, we had Wall Street stocks rallying yesterday. We saw the S&P 500 up 0.69%, NASDAQ up 0.91%, the Dow up 0.21%. Then in the Asian trading overnight, we had the Nikkei up 0.25%, Hang Seng 0.23%, Shanghai Composite up 0.50%. So Wall Street was followed by Asia, and in the morning trading, Europe broadly followed the positivity from Asian overnight headlines. So there's been a risk on tone. That's what's been in the market. It's a definite risk on tone. Market feels optimistic, and so as we're looking at the session ahead, we can see that this is dominating the talk. So you can look at that. Another thing to be aware of is we've had phase 1 of US-China trade talks due to be signed mid-November. Optimistic. Now phase 2, look for inclusion of energy. Okay. Because China's imported a lot of energy from the US. So here you can see, prior to the trade negotiation breakdown between US and China, you can see that the US was exporting quite a lot of energy to China, and those levels are still to return. So at phase 2, if we see some positive news about China importing US energy, that's going to be positive for risk. That's just the one little thing to keep aware of. So here we go. As we get into our handout, the first thing we want to do is look back. And the reason we're looking back is very simple. We want to find some strong or weak currencies for the European session, because the whole idea is we want to trade the strong currency against the weak currency, because we want the currencies going in different directions. So in your handout, you'll see, look back, identify recent sentiment by reading up on the last 2 sessions of market activity, identify that key market sentiment and summarize that sentiment in a sentence or 2. Sentiment is simply the mood of the market. Okay, this is a learned skill. So all you have to do is keep trying to do this each session, just keep trying to say which is the strong currency, which is the weak currency. You read back on news wraps. Let me give you an example. Let me show you like how you could do this without any, on totally free resources. So on totally free resources, you simply you can go to this website which I use, forexlive.com, and very simply then go to session wraps underneath more. Okay, and then with pushing for the wraps, you just look at, here we go, and now you've got a little summary, and in this summary you've got some of the key stories. You've also got the strong currency and the weak currency. Technically, it's not always going to be fundamentally, but it's technically that's there, so that's helpful. You've got some of the key intermarket readings from different markets, and then you've got the explanation on the issues that have happened, and we've got some explanation on the pound. Okay, so you've got here you've got a very short explanation of what I was explaining. The programme motion is representing a separate issue now, as lawmakers may not want to rush the Brexit process. As such, that may yet throw a wrench in Johnson's plans to get things done by 31st of October. That's why we've been seeing the pound falling, because even if he gets the vote through, the problem may come from the programme motion and the amendments. And if they don't get through, then Johnson has said he's going to throw the whole thing out. But if you look at these session wraps, that's a good place to look for any key sentiment, anything that's really driving. And as I said, that is a free resource. So by getting that free resource, you can have some, heads up on what the mood of the market is. Okay, so looking back. Okay, the first thing we do, I come to my desk, European morning session. Just at the end of Asia, I want to see what was happening. So this morning, simple, Asian equity markets were trading higher on Brexit and US-China trade optimism. Okay, why do FX traders care about the equity markets? We do that because the equity markets show us risk appetite. When we've got a falling equity market, we know that risk is off. And when we have a rising equity market, we know that risk is on. Equity traders are very sensitive to risk. And if they're feeling spooked, they'll be generally moving money out of equities. And those outflows of the equity market tell us how the market is feeling about risk. If you want to see some of the correlations for different markets for a risk on or a risk off mood, you can take a screenshot of this slide here. That would be, very simple risk on, risk off correlation slide. I just use it there. It's helpful, particularly for trying to learn how all these different intermarkets relate. That's one quick cheat sheet that you can just screenshot and use it for future reference. When we have risk on markets, as we've been experiencing recently, we have the higher yielding currencies like the Australian dollar, New Zealand dollar, and Canadian dollar appreciate. Okay, so we have that during risk on times. Then we also have the yen and the Swiss franc tend to be weak. So you notice in the the session wrap that Justin did on forexlife.com had the New Zealand dollar was the strongest and the Swiss franc was the weakest, and that was because we're on a risk on mood. Okay, so we'd expect that risk on mood to carry on for the rest of this session, you know, in this US session, subject to, you know, obviously bad Brexit news out at 7 o'clock this evening, and subject to any poor US-China trade developments. A risk-off market, we have yen and Swiss franc strength and US dollar strength, and we have Australian, New Zealand dollar and Canadian dollar depreciating, and you have the Nikkei tends to fall in value as well. So that's something to be very aware of. In the Asian session, we have optimism about US-China trade deal and Brexit in the markets. That was what was driving the risk on tone. You know, you didn't have to read very much to see that. Oh, and I would say the other thing that is helpful is the Rand Squawk service does do a rundown on the latest, at the end of the start of different sessions, and so they do give a potted summary of some of the major news. So that's really really helpful as well. That's another thing about the Squawk service. They do these little reports which can be very helpful. Now, in the European session, we've had more risk on tones, and European equities were broadly supported. So that was what was happening in the European session. Now I'm just going to have a look at see what equities are like here, because we've just had the US cash open, and in the US cash open we've just had the S&P 500 is currently up 0.17%, and the Dow's up 0.04%, and the Nasdaq up 0.36%. So a broadly, it seems to be quite strong on the open for US equity. So there's some European markets are down a little bit. We've got the Portuguese and the Italian FTSE down a little bit, and a lot of the other European equity markets are sort of flat. In fact, let me just show you here. It's easier to show you this than talk it through. So you can see here, S&P 500 just opened up in the green, Dow up, and the Nasdaq is up. So it's a positive mood still in the market. That risk on tone is still here, and what the market's going to be looking for is going to be looking for any shift from that. But at the moment, it's going to need a catalyst to shift for that, because we've got good strong news. So the sentiment now for the US session. Now I skipped over this. Now this was the sentiment for the US session. Now sorry, this is the sentiment for the start of the European session. What we had is we had weak US dollar and strong New Zealand dollar. And New Zealand dollar, that was just strong because it was outperforming all the G10 currencies, as it's a clear risk-on currency. It's one of the high beta yielding currencies, so it tends to attract inflows on when market participants want to pursue risk. You're going to see New Zealand dollar and Australian dollar appreciate, and that's exactly what we had. And the flows were moving out of the US dollar into the New Zealand dollar. So the pair that I was looking at this morning was the New Zealand US dollar currency pair. So if you go to the charts here, and you can see that I got there was a good support level here, and there was a good support level here. So these were two very straightforward places where potentially I was looking to entering a New Zealand US dollar long, and then I'll be looking at taking profits up at this high here, 0.6430, and that that trade would still be valid for now, and be looking at profits taking up in 0.64 30. Returning to the start of the US session, sorry I missed out a slide there, I would have exactly the same strong currency. New Zealand dollar would be strong on Brexit optimism and US-China trade optimism, and the Swiss franc is weak. So again, I'll be looking at New Zealand dollar, Swiss franc, and just the way we'd go about looking at this, you know, where would be a key place to enter. You can see already that you know, this overhead resistance was always going to be a key place for entries. So you can see going out further, there's this high from there, and you can the other way to do it is you move a fib retracement from yesterday's low. Okay, so the low of yesterday was down here, so we'll take it from the 21st of October. You can see that, you know, another good place to enter potentially would be this 50% retracement level. That would, I would expect to find buyers there, and you know, you might find some buyers here on this horizontal level, but obviously it's a bit of a quite shallow pullback, you know, just there, but you may find some buyers on there for price to move up. Otherwise, the 50% level is the one I would be interested in. Sort of here, it's 0.6321 down to about 0.6313. That region there in the 50% to 0.618% fib retracement level, 200 exponential moving average, or some intraday overhead resistance. So that would be anywhere there. I'm potentially looking for longs, and obviously profit taking back up at previous highs just underneath 0.6350. So, you know, 0.6345, just up in those shoulders would be a good place potentially to look for profit taking. Oh, so now I'm just going to come to any trades that you guys are looking at. Is there any trades that you're thinking of? And it's a new feature I'm doing on the workshop because it gives us opportunity to talk through different trades. So if you've got something you'd like to look at, just pop it in the box and let me know anything that you're on. Give folks a second. I know I sort of sprung that on you. But is there any trades you're looking at? Okay, Euro US dollar. Yeah, okay, let's look at Euro US dollar. Let's just pull that chart up. Okay, true. Okay, Euro US dollar. So let's check that off. That's good. Okay, so on the Euro US dollar pair, let's see what's driving the currency at the moment. Well, we've been seeing the euro, we've been seeing that appreciating with the dollar weakness. And the dollar weakness has been on this Brexit optimism and the US-China optimism. So you can see the euro-US dollar pair has shown a very similar path to pound US dollar. Technically, we can see this level here, the 1.10 level of this high here, this low there. You can see it was support, it was resistance, price broke through resistance, and then this 100 exponential moving average, 1.100 level, that's likely to find buyers on a first test down here. Now, the outlook for the euro is pretty dovish, and we've got coming up this week, we've got the manufacturing PMI and services PMI for Germany, France, and the Eurozone. So let's just quickly ping that up. So if you look here, we'll see on Thursday, we got these flash manufacturing PMI and services data, which will be key for the euro and obviously the monetary policy statement. So with the euro, what I'm thinking of is on Thursday, we've got some key decisions coming out from the ECB, and I would expect the euro to take a fresh movement out of Thursday's deal. At the moment, the outlook for the euro is weak. So the move in the US dollar pair has mainly been driven by the US dollar. It's all been driven by US dollar weakness. So the key indicator now is looking for some weak EU PMI data. Now, if we get a better, see, this is what we're looking for the euro. Say you get services manufacturing for Germany and France, say they come out stronger than expected, okay? Because the market is so tilted towards a bearish outlook, if we get some better figures for the French and the German manufacturing and services PMI, then what we'll see is we'll see the euro appreciate, because the market is so biased towards selling the euro. Any kind of good news, any kind of recovery will likely see the euro being bid. So what I'd look for here is I'd wait for Thursday to see if there's any positive data that comes out of the euro, and then potentially try to join any upticks on that move. Now, the thing to be aware of is with this euro move being driven by US-China trade optimism and Brexit optimism, and the weakness in the US dollar as money flows out of the dollar into some of these other currencies, the thing really to be aware of is how do you manage that going into the event. Now, we can't really know what's going to happen on Thursday. We don't know what's going to happen with Brexit, and Donald Trump only has to make one tweet and US-China trade optimism retreats. So it's quite a sensitive pair, but I would be hesitant to enter any euro-US dollar positions at the moment. Trib, just out of interest, are you long or short euro-US dollar? You're long. Yeah, I would be biased long. As long as this optimism continues, I think that the bias long makes sense. Okay, that does make sense. But obviously Thursday will be a key risk day for you, and the US-China trade optimism and the Brexit optimism as well. So you just got to be aware that some of the optimism around Brexit has been encouraging the risk-on moves. So if things don't go well tonight, we might see some more risk-off moves. In which case, going on to Sammy, your pound yen. Okay, so pound yen, you can see the pound has been bid, look, very strongly these last few days, and we're just seeing some downside today as prices retreating back some of those moves. So the key thing to be aware of, Sammy, with the pound yen is what happens tonight. Okay, so if the withdrawal agreement goes through without the amendments, then I would expect pound yen to move up, and you'd expect this 1.44 region to be tested up here. That would seem an obvious target from current prices if the agreement goes through. Obviously, price is just contained at the moment underneath this 1.4, this 1.4 level here. So just zooming in, we're just sort of pushing up against this overhead resistance level. So if the deal gets accepted, withdrawal agreement passes, no amendments, then I would anticipate moving up to 1.44. That would certainly make sense to me. And if it doesn't, and a general election is called, then that could spark some downside in the pound yen, because what we might see then is the pound falling on the news that, you know, a Conservative majority is a hard deal Brexit more likely. Although I'm less certain on that side of it, because the EU has already said they're going to grant an extension. So for me, the trade potentially with pound yen, Sammy, potentially that I'd look at, it would be looking for a long if the withdrawal agreement passes without any amendments. That for me is what I'm looking at. Sammy, are you looking at short or long pound yen? Okay, long, yeah. See, long pound yen makes sense as long as the withdrawal agreement is passed. So that would be one to potentially look for today. You can see the bullish pressure building. So a break of these highs, you know, would be the tell, isn't it? The 14165. So you know, one potentially there's a buy on stop of those highs there, looking up to the 144 level. Okay, then we're looking at gold. Hashik, we're just going to look at gold now. Okay, we see gold has been on this huge run really since the start of the year, moving from, you know, $1,270 to $1,560, just shy of those levels. So we've seen a good bullish run in gold, and now we see gold is just consolidating. So you can see it's moving down into this triangle as price is ready to break out. Now, for me, the next catalyst for gold is likely to be the Federal Reserve decision at the end of October. So in about 10 days, we've got the Federal Reserve meeting. So if they cut interest rates more than expected, then I would expect gold to break out to the upside. But you see, the attraction of gold, you got to remember, the attraction for gold all this year has been a combination of things. It's been risk with US-China trade and Brexit. It's also been low interest rates across the world. So those kind of twin things of risk aversion, low interest rates has made gold attractive. We've seen gold just, you know, just kind of consolidating at these highs. It's not like it's pulled back massively, but we can just see that there's some consolidation and there's been some more pronounced selling since September. Okay, you can see that that's just slightly worse for gold. We made a leg down, up, second leg down, and then potentially looking at another leg down potentially. Now, whether we'll get it or not, I'm not sure. So where I am, are you long or short gold, Hashik? Okay, Sammy, you're long now. Yeah. Long. Yeah, I can definitely see a case for long golds. What you would need, Hashik, is if the US-China trade talks break down, or we get some, you know, weak US data or a more bearish outlook from the Fed, that's going to keep gold supported. So they're the things to look for. But if the US-China trade deals are going really well, if the Federal Reserve decide, you know, they don't need to cut rates, you know, after all, then, you know, we're going to see some of that dollar weakness retreat. Okay. And gold will sort of lose its value if there's less risk in the world, if central banks are not cutting their interest rates at the same rate, we'll probably see a deeper pullback in gold. So they're the key events that I'd look for there. And a key stop for me here would be the 1,450 level, because I kind of see that if this 1,450 level, maybe just underneath the 100 exponential moving average, let's see if there's a pivot point there. Yeah, like 1,434. So that would be a key stop, and you can see here price is just being contained under this pivot point there. So key stop for me would be 1,434, and that would let me know, if price hits there, I'm wrong. But I think you get some kind of warning that price was going to take your stop. You get a shift in the fundamentals. US dollar, Turkish lira. Now we've had Turkish lira weakness, haven't we? Obviously, we've had the problem of Turkey invading Syria, and they've been taking on the YPG, who are loosely, possibly, debate to be affiliated to the Kurdish rebel group, the PKK. And that's why we saw when Turkey invaded Syria, President Trump wasn't very happy about that, because the Kurdish rebels were allies fighting ISIS in northern Syria. So President Trump sort of said, I'm going to obliterate Turkey's economy. So we saw, weakness in the lira. That's why we've been seeing, long US dollar, Turkish lira longs have been in play there. Now, the thing to be aware of is this US dollar Turkish lira pair is going to be moved around by these geopolitics. So yes, Donald Trump put some sanctions on Turkey, but will those sanctions carry on? It seems to me that as long as Turkey don't go back into Syria, or as long as they don't escalate the war with the YPG group, then it seems to me that it will calm down. So I would expect some of these longs to slowly, move back. And obviously, if the US-China trade deal does get accepted, then that's going to support some emerging currencies. So that would support the Turkish lira. So again, this is going to depend on what's happened between Turkey and Syria, and whether the US put further sanctions on Turkey. Okay, so in a simple way, if we get more sanctions on Turkey, then expect the Turkish lira to lose value against the US dollar. So that would be US dollar tri longs. If it continues to calm down, and Turkey doesn't seem to be invading, doing any more stuff against the YPG or the HKK, and things calm down, then I'd expect the Turkish lira to strengthen as an emerging currency and benefit from US dollar weakness. So that's what I'd look at, the US dollar Turkish lira pair. It's not a pair I trade, but that's how I would be looking at it. And the thing you got to watch out for in this pair is the spread that you have to pay with your broker. You could get quite a wide spread, whereas if you're looking at something like the pound, US dollar, euro, US dollar, pound, yen, gold, the spreads are much more reasonable, and it's much easier for retail traders to get a better price for that. So I hope that's helpful. Yeah, that's good, guys. Thank you for your trade ideas. I hope that's helpful. Obviously, for the euro, you're going to be looking at the ECB on Thursday, and it's also worth just pointing out before we go some Canadian data I just want to pull out to you. Now, we had some retail sales out which were quite weak for Canada out just before we started this webinar. Okay, so expected 0.0%, we got minus 0.2%. Retail sales month on month minus 0.1% versus 0.4% expected. Now, this Canadian data needs to be read in line with the business outlook survey. So that's at 3:30. Now, if we get weak data here and a weak business outlook survey there, that potentially could be the catalyst for some Canadian dollar selling. Now, we also had the elections out for Canada, and the elections for Canada, what they, the present president has got enough seats to stay in control of the government, but now he's in a weakened position because he forms a minority government, and he's dependent on minority parties to try and push through legislation. So it's going to be much harder for PM Trudeau to make laws in the second half of his government. Now that's likely to weaken CAD. It's harder to put through laws. You're just getting more of a you can't push forward with reforms or changes or developments. Everything's much harder. It's harder to run government without a majority. So that could weigh on the Canadian dollar. So you put that together, if you've got weak core retail sales, Trudeau has got a minority government, he's got a weakened position, is likely or expected to drag on the Canadian dollar. If we get a weak business outlook survey, then potentially you're expecting more weakness there. So the pair I'd be looking at like either a New Zealand dollar CAD or an Australian dollar CAD. So you can see, since the data came out here, we're seeing the Australian dollar. Now, the Australian dollar is expected to be strong on US-China trade optimism, okay? So if we get further weakness from the Canadian dollar, then I would expect this pair to be bid further, okay? And I would be looking for price moving up to testing these recent highs. So that would be an obvious target should we get a weak business outlook survey. Target is 0.900, just up there would be a very obvious place for longs to take profit. So that's just to be aware. I've got that outlook survey coming up in about 30 minutes. So potentially got three things lining up here: weak retail sales, weak business outlook survey if it comes, weakness for the Canadian elections. So that would speak to me of Canadian dollar weakness. So just wait for that one more, and then that would be enough sentiment for me to expect buyers on Australian dollar, Canadian dollar pair at market, and buyers at pullbacks. So that's what I'd be looking for that. Okay, guys, that's been really good. Thank you for all your trade ideas. That's been excellent. We haven't got time for those, but in fact, we need to look at our risks sometime. Maybe do another. Maybe. Oh, just want to quickly say, next week I'm not here. I'm going to be on holiday for next week and Monday, but then back the week after next. So just to be aware, there won't be a webinar and workshop next Monday and Tuesday, and it will be happening again the week after. So that's just to let you know. Guys, thanks for a great session. Thanks for your trade ideas. And I hope you have a really good session, and look forward to seeing you guys, not next week, but God willing, the week after. Thank you very much, guys. Yeah, thanks, Aaron. Yeah, thank you, Trivivan. That's great. Take care now, guys. Bye.